to the Capital Discussions Market Analysis. I'm Tom Nunemaker with Jerry First. Before we get started, quick disclaimer, the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options could be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And with the disclaimer out of the way, Jerry, welcome back. It's been another week. How's your trading been going?
Trading's going good. Got plenty of things keeping me busy on several fronts. And the market has been pushing to the upside since we've talked last. And so can everybody see my screen right now? I've got the Capital Discussions website up.
Yep, I see it.
All right, very good. So today is Monday, June 1st. Welcome to June. We've made it through sell in May and go away, and so now they're saying watch out for June. Equity markets closed on the East Coast here currently. And so for those of you who are tuning in for the first time, I'd like to go through the week ahead, starting out with the economic events. We'll look at the charts of the major components of the global market, and then we can drill down into individual stocks, such as maybe Goldman Sachs. So for those of you who would like to maybe have a chart reading session unrelated to the astrology, although there are some people out there who trade by astronomy, we won't be getting into that. But if you've got a stock symbol that you'd like me to go ahead and pull up and take a look at, and maybe we'd even jump into some option view as well. I know that a lot of us here on Capital Discussions are option traders. So Tom and Jim done a great job with the website. And so on the home page, as soon as you log in, you can see the upcoming events for the week ahead. And we do have a lot of news coming out. We've got, of course, for the first Friday of the month, non-farm payrolls. Last month, we had the GDP report come out. And it was somewhat disappointing to some people and somewhat expected by others. Let's pull up, if you click on the upcoming events tab right here, we can pull up the entire calendar. Today's personal income and spending came out somewhat in line with expectations for the most part. And overnight, the futures markets were being roiled by the fact that Greece was or wasn't going to exit once again every week. Greece, and more Greece. So here, Tom's got the calendar filtering for U.S. news. Motor vehicle sales coming up on Market Focus. I did my meeting last week on when to sell, and we had open discussion, guided discussion here in Deerfield Beach, South Florida. And the topic of subprime loans, especially being pushed into the auto market, came up. And it's interesting when you think about the fact that, is it Takata, whoever it is with the airbags, they're going to do a huge recall, probably for the last 15 years. If you have a car made within the last 15 years, you're going to probably get a recall notice. So you're going to be invited to bring your jalopy into the local car dealer and probably take a new car for a test drive. What amazes me is that coming up, maybe not on this calendar, but we do have the trade agreement, otherwise known as TPP or TPIP, and then they have another one coming up after that. It's amazing how these trade agreements, if you notice, for those of us importing a lot of products from China, we can have poison, drywall, poison dog food. Now we have lumber liquidators being affected by formaldehyde, devastating a publicly traded stock. For those of you who think I'm going off the rails, I'm not. The concept is that why is it that a U.S. company like General Motors, where maybe there's 12 known fatalities because some people put about 12 pounds worth of keychains and ornaments on their keychain, so it caused the ignition switch to turn off while they're driving. Okay, I mean, every fatality is horrible, but 12 out of the last 20 years, millions of cars. So GM gets to get sued for billions of dollars, but China gets away with flooding our markets with poison. You know, it's just a little bit of something to think about. And yes, you can go ahead and start trading on that type of information too. Obviously, if you were involved in lumber liquidators and couldn't understand why a stock like lumber liquidators would go up so much just to get crashed, it happens all the time. It happens all the time. Here's lumber liquidators, made a peak at, about 120 back in November of 2013. Now it's trading all the way back down at 21. So also, I mean, hey, could that be an opportunity? Is lumber liquidators going to be liquidated, or is that a buy point? Something to think about. So now that I've gone off the rails, back to the calendar. Okay, Wednesday, ADP employment report, international trade. We've got some of these Fed people talking, and productivity and costs. And then Friday, non-farm payroll and consumer credit. So interesting. We do have some potential market volatility built into the calendar. What are some of the other things that could move the market? Anybody want to chat and chime in? Please go ahead. And let's see, what do we got here? It looks like somebody's chimed in. Oh, here's, what company was that? David's asking. Was that Lumber Liquidators? And then formaldehyde, well, it depends. Aldehyde group is awesome. Okay, David Stewart's putting in the formula here. Sorry, I read your ignore me comment too late. Oh, the airbag company is Takata. It's a Japanese company. I don't think it's maybe an ADR. I don't believe you can trade Takata off the New York Stock Exchange or NASDAQ, but I think it's Japanese. But yeah, keep those comments coming there, Dave. And I'll try to keep up this time. Okay, so that's basically, okay, the week ahead. If we were to go ahead and take a look backwards, yeah, this calendar, I don't see the backwards move. We just had some interesting information come out last week, especially related to the GDP and how they're fudging those numbers as well. So that's the fundamentals. Let's take a look at the technicals. Here's my 3x3 chart, for those of you who are here for the first time. On the top row, euro versus the dollar, middle, pound versus the dollar, top is dollar yen. I want to bring your attention to the dollar yen because I've been pointing this out for quite a while, where we've had a classic flag pattern where we have a really nice run up, and then we've got this pennant. We weren't quite sure, but this is a bullish pattern, and if you believe in this pattern moving forward, then we could have quite a bit of a move to the upside, indicating dollar strength. So quick quiz for everybody out there. If the dollar is going up in general against other currencies, in general, what does that mean for the equity markets? Does it go up or down or sideways? And I'll go ahead and I'll allow you guys a Jeopardy moment for your comments. Down initially. Yeah, it's probably as good as any. The correlations, actually, David, yeah, that's a pretty much, you could also type in depends, which is always a safe answer. The correlations that have always been correlated are not now correlated, so you can't say always anymore, can you? Which is almost like, I almost never say never except when I say what I just said. And so, in most cases, if I bring our charts down to, let's say, a 30-minute chart, you should see the correlations come in a little bit clearer. They're a little bit out of whack here. Let's shift up to an hour. So the easy correlations to see is where the euro-US dollar is typically inverse of the dollar index. And so you can see we've got a little bit of a hump here going sideways, a little bit of the opposite direction on the dollar index. You can see that the S&P 500 and the Dow and the NASDAQ, which are the NASDAQ, the Dow, and the S&P 500, these are 1-hour charts, have all pretty much, you've got this making lower highs slant to the downside, except on the NASDAQ. And I'm not going to get that call, even though it's kind of important. Excuse me for that. So the correlations are not quite working as much as they used to. Notice that the pound US dollar is just, the pound seems to be really losing ground here ever since their election a couple of weeks ago. And it's amazing to me that something as important as, well, I think it's important, the British elections taking place where the Conservatives completely surprised and shocked the polls that they could take out such a landslide. It's interesting. You can be a weatherman, you can be a economist, or you can start up your own polling service. Seems to me like nobody's ever held accountable for getting it just a little bit off. But everybody wants to tune in.
One definition of economist is the only job in the world where you can be consistently wrong and not get fired.
Yeah, add economic pollsters to the list. Yeah, because if you ever notice, I mean, they just are constantly just way off the mark. Usually the more important and the more polarized, the more off they are. So, you're over there kind of in the Eurozone, Tom. I don't know if anybody else tuned in is, but I don't know what's going on there in the UK, but it looks like, the pound leading into their election was gaining quite a lot of strength at the time. And notice the run up over here, and now, yeah, it's been pretty good pullback on the currencies.
Yeah, the euro's come back a bit, which helps because I need to buy some for my mortgage tomorrow.
Well, can't you just buy it in dollars? Do you have dual accounts?
Well, you get the best rate if you do it on the Forex market. So I wire U.S. dollars to Interactive Brokers, go to the Forex market and buy euros, and then you wire from IB into my German bank, and that saves a bit of money every month.
Interesting. So, yeah, and supposedly this summer you're going to see a lot more Americans overseas than you have in recent years due to the euro, which has been under pressure. Let's look at I like to look at the higher time frames because that's really where you get to see what's really happening. As I was alluding to initially, it looks like the dollar yen, looks like the yen's under pressure and the dollar is moving towards the upside. If we took a look at the S&P 500 on the bottom left, you'll see that we've pushed up and we made all-time highs a couple of weeks ago. Now we're pulling back. We're still tightly inside this range, or I should say inside the middle of this trend channel. And so we're pretty safe to make higher highs or to just go ahead and retest some support levels. How's that for an economist? Same thing as if we were to take a look at what happened there. Here's on the Dow. I mean, just what a, don't fight the Fed type of chart. I think that I have this already done, but basically the concept is you draw supporting trend lines and supporting resistant lines, or you go ahead and test to see if I drew this line here, and notice that if I drag it back, going all the way back over here, it's pretty much capturing the bottoms of this supporting trend line. And then if I click and drag this up, it duplicates my line. And notice how symmetrical that is, where it's capturing those two tops right here. And then I can do it again. And notice that it's capturing the resistance here, here, and here. And let's see if I can do it again, where it's capturing the support levels right here, 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 over here. And so there's your tight trend channel. This is the weekly chart of the Dow 30. And I'll make an assumption that a lot of us here are either trading the index futures or the equity options markets. And so if you wanted to, you could always go out to stockcharts.com, not to be confused with freestockcharts.com. Take a look at their Dow 30 page, and this is a one-year chart of all 30. I'm sorry, this is a 6-month chart. Let's look at a 1 year. So on one page, I'll get all 30 Dow charts real quick, and I can just kind of quickly gauge what's happening. Up, down, sideways. It defaults to a 20 and a 50 period moving average. And I'm looking for potential high probability chart patterns. I did see Merck and Microsoft had a couple of interesting patterns, kind of opposite. I'll show that to you in a second. And as far as sectors go, it was very interesting. Last week, we had Humana decided to go ahead and put themselves up for sale, as well as a lot of the biotechs are in play. So healthcare, biotechs, insurance companies seem to be potential high volatility movers. Now look at Walmart on a one-year chart. It's come back down to 75. And it seems to me as if some of these companies are going to have a hard time disappearing. ExxonMobil, Walmart, United Health, maybe they could end up in trouble possibly, but I don't expect Visa to disappear. These are, depending upon when you're going to invest in trades, you have pretty much 3 basic categories. You've got your trades, and you could break that down to day trades, iron condor trades. You got your earnings trades, or just your high probability setups. Then you've got your swing position trades, and then you've got your longer term investments, all of which could be done with the leverage and safety of options if you know what you're doing. And when you see some of these blue chips, obviously every once in a while the Dow picks out the losers and throws in some new winners. But when you take a look at American Express, interesting how it's hitting the bottom. And American Express recently is actually fundamentally coming up against some problems where they used to be the exclusive credit card company of Costco, which they've lost that contract. That's gonna bite into them a little bit. And so I would make the assumption, it's not a recommendation, that you're going to see American Express's revenues probably take a little bit of a hit. Of course, they're probably going to go ahead and put some forward guidance in for that, but it's just something to look at. Disney came out with, I believe, a new CEO or some changes up on top, and they're looking, I guess, probably for their latest movies and theme park additions to keep them going. The prices of Disney World just keep on going up. And then I've got a client very active into Goldman Sachs. I was just looking at Goldman Sachs today with a client continuing to drive higher. And the general rule of thumb is that the financials will lead the market higher or lower. And so how many people here feel that that Goldman, JP, American Express, Visa, some other financials, how many people feel that those are probably on the upside, the downside, under pressure, or looking like they're going to continue to the upside? Let's go ahead and scroll back. Somebody typed some. David, if you're being in small cap biotech, I honestly don't care all the chart. If you have nothing else after this, could you take a look at OPK? It's in a short squeeze, which could show the listeners how to determine that by looking in the synthetic, which is trading 50 cents underwater, which shows that it's hard to borrow. If you want to look at it, it's okay. Well, if you want, I mean, I could go through this, and if we have some time, I'll definitely, I can, I know, David, you do presentations occasionally, so if you'd like to go ahead and show that rather than me, you know, if that's something that you're you know, well familiar with, we can go ahead and do that. What I wanted to go ahead and show was not just Goldman, but here I'll take a quick look at Goldman. This is what my charts look like when I am deep in the analysis. We've got resistance at 209.50, and we're currently trading here at 207. And if you look closely here, look at the daily chart. Daily chart, we have trend channels. If you can see these, I mean, I've got a lot of lines here, but we are in a trend channel. And if you bring in more data, you can see that we're in a wedge pattern here, which, let me see if I can draw that for you a little bit. So we are at the top. We're at the top of resistance here. And this wedge pattern, typically wedge patterns like this pointing to the upside are bearish, where we would have support at about 190. However, if the markets do want to continue higher, we've got some further upside to 210 and beyond. If we look at the weekly chart over here, it's easier to see the trend channel that we are at that we're sitting on the top of right here. And we have a Fibonacci cluster right here as well. So,
and Jerry,
so
I David, so he can join the call. If you have any questions, he can just call right in.
If he wants to go ahead, and I can go ahead and I'll pass it over to him. Sure. Not right this second. Let me finish up what I'm doing, and then I'll be happy to. OPK, it's a small cap biotech. Okay. And let's take a look over here. Something I wanted to show you was the two opposite patterns. Over here on Merck, if I bring in, Where is, okay, over here on Merck, if you take a look at this, this is something that some people will call a megaphone pattern, where, notice here we had a triangle pattern. Doesn't even matter what time frame. I'm using this for example for demonstration purposes only, any education. But we've got this triangle pattern that broke the upper resistance, and then the trend line, the upper resistance line, became support. And now we have an expanding wedge, or a megaphone, which is typically broadcasting. The general rule of thumb is a bearish trade, but it could still go in either direction. The assumption of these high probability chart patterns is that they have this energy wound up inside of it like a coiled spring. And that coiled spring you can see like right here, where it's gone up and down, and then finally the buyers and sellers have come to a certain point of agreement, and then bing, it heads up to the upside in this case. Okay, so when you take a look at that on the daily chart, or the higher time frame, you notice that that's just the upper range of a larger trend channel. So now if we take a look at Microsoft, it really doesn't matter what the symbol is, but in this case we have a triangle pattern. I just happened to notice that there was an article about Microsoft Windows 10, which we talked about a few weeks ago. And so it's interesting what Microsoft is going to do for the average retail person. They're going to take over your computer, kind of like, I guess, AOL and Google Chrome likes to do. And so if you're just a regular retail computer user with Windows, they're going to force you to have your updates. It will no longer be a choice. However, if you are a more, what would you call it? I'm sorry, corporate client, you have a choice. There's also some other issues. You're going to lose a couple of other features. So Microsoft, okay, they also gave the spec. So 1 gigahertz processor, you need 16 gig of storage, display resolutions of 1024 by 600, and then they say that the specs are higher for a 64-bit version of Windows 10, but I can't imagine upgrading to Windows 10 on a 32-bit system, but I guess for some legacy programs it's possible. So I just wanted to go ahead and touch on that. Any other questions? What are some of the other things that I had to discuss or could discuss? I do coaching and mentoring. This is what I do. I've been providing education now professionally for over 12 years, 13 years, live in South Florida and around the world. Got heavily involved in the currency markets. I was initially first on Forex for FX Street from 2006 to 2010. Considered to be a charting and technical analyst, expert, and what I do is I do either private one-on-one coaching and mentoring, or occasionally I will do live workshops and potentially talking to Capital Discussions about offering a web-based workshop so that you can learn how to do charting and technical analysis. If you're using options without understanding risk and reward of the support and resistance levels, you are at a disadvantage. If you're strictly, there are some people out there like Tom Sosnoff and some other people, you know, they just go by the delta, or they just go by the standard deviations. And everybody's got their own way of looking at the markets. I mix in a lot of different things, but charting and technicals are the biggest thing I hang my hat on. But just as I was explaining earlier, I look at the fundamentals. I look at a lot of different things that can affect the market overall.
Hey,
as
Jerry.
well. Yes, sir.
Jerry, I agree with you on that. Looking at support and resistance is important, and I couldn't help but chime in. Tom, I don't love him. I like Tom. He's a hypocrite. I mean, he's talking about he doesn't look at charts. He doesn't do this. He doesn't do that. And, I don't listen to his show anymore. Once in a while, I'll do the Jacobs. Once in a while, I'll watch something or somebody sends me something. So if he doesn't believe in TA at all, why is the guy always like trading futures and stuff, and then you have bad over? You did good on that, Tom, and it's insane. I mean, he's trading futures, so you're telling me he doesn't have a directional opinion? It's silly.
Well, I mean,
If you've ever watched that show, you see how he sounds like uh, trading futures and things like that,
right. Well, remember, Tom comes from the floor, and even Don Kaufman, friend of mine from years back, he used to work at Trade Secrets before he went there and then left there to go somewhere else. But some of these guys from the floor, they didn't have time or the education or the access to computers like we do, and so they were taught standard deviations and classic pivot points. And all of that makes a market. When you've got floor traders who are using pivot points on the futures, I mean, if the majority of the guys on the floor were going to use that, or if some of them use their own version of a standard deviation, they can, they could move the market. What bothers me is when anybody gets religion or religious about my way is the only way, and if you don't agree, and if you don't agree with me, you're a moron. Yeah, and I am not casting Tom in that light. I just happened to pick his name out of the bunch because I know Tom and Don used to make fun of technicals and charts for the longest time. But I even believe that they've come around a little bit.
Yeah, well, then why is he more? But they have to put up with, oh, that was a good fill by you, Tom. Good job by you, Tom. He's trading futures half the day. Excuse me.
Right.
If you're going to trade futures, you better know what you're doing. And my personal opinion is use it for hedging or just absolute gimme trades. Or, I don't think most people should be trading directionally futures.
Right. Now, Tom Nunemaker, not Tom Sosnoff. If Tom Sosnoff is in the audience, he can chime in. David, your audio's breaking up digitally a little bit.
Yeah.
Tom Nunemaker, does that sound? Are you getting it clear, or is it just me?
No, it's breaking up for me too. But
yeah, it sucks. I'll just show that synthetic relationship because I'm taking care of my dad in Western. I don't have the internet power.
All right. I'll go ahead and I'll turn over. I'll give that. But if anybody's interested, you get a free coaching and mentoring session for 30 minutes, see if we're good for each other, and then we'll take it from there. But otherwise, unless if anybody else has a question, we'll hand it over to Dave Stewart. And Steve, thank you for, you anticipate a rise in the bank stocks if interest rates rise. Yeah, and my 2 cents about the interest rates, I think that they feel obligated to raise a quarter point and hold just so they can tell everybody they did it. I don't think it's going to make a difference. It's not like in the old days where that once they start raising rates, it's the beginning of a trend. Because the truth of the matter is there's trillions of dollars that they owe interest on. So if they raise interest rates, they're raising interest rates on themselves. Right. So anyway, with that, if anybody has a question, you can type it in, but we'll go ahead and let David grab the screen and talk about some analysis he's done. Go ahead, Dave.
Yeah, I'll just try to do this quick because I'm not having good luck up here in Western Mass.
You're coming through clear now. So.
Oh, okay, good. Let me know when you see live vol.
Yep, got it.
Okay, so this is good for people to know, to understand this. So if we look at this OPCO here, I mean, it's gone up every day more or less for, weeks. But if we look at this and we look at the September 18 call, for instance, the way you do this is you do it as a market maker would look at it. So these are, maybe a little stale. They're after hours. But if we sell the put for $2.15 and we buy the call for $1.85, that's 30 cents underwater. We can buy the stock for $17.70, right? that's a little stale. It's more like 45 or 50 cents, but that would be 60 cents underwater to this stock price. If people don't understand that, they can ask me to go into more detail. But this is really what you need to do if you're trading option equities in options, excuse me, options in equities, because this shows you that it's a hard to borrow and that there's a squeeze going on. Because that wouldn't trade underwater otherwise. There's no dividend or anything. So I just thought it was useful for people to kind of see that. So anytime you want to look at that, you know, go to the at the money, pretend you're a market maker, sell the put for $2.15, buy the call for on the bid $1.85. That's 30 cents. So you're buying the stock for $17.70. The stock's at $18.30. So, that you might say that doesn't make sense. But what that shows you is that it's a hard to borrow. Actually, there's none to borrow. And there's just a slow squeeze going on in the stock. And it just goes up and up and up and up and up. When that ends, I don't know. But trying to get questions, that was really all I sort of wanted to point out to people is how to look at that relationship on the synthetic. Because you wouldn't see that normally.
Well, I've got two questions on that.
Yeah, sure.
One is that, the theory is that all options are effectively priced, except for temporary aberrations, and with the speed of computers, those aberrations are quickly dissolved.
Right.
That's one. The second one is, in today's day, I was just talking to one of my clients earlier today because he wants to go into stock replacement strategy, and he's saying that he wants to short stock. And I'm saying that back after the tech bubble burst, one of the rules they changed amongst margin requirements and day trader rules was that the brokers had to make sure they had inventory, because during the tech bubble, more stocks were shorted than existed. And so it's now as if you short a stock, you could get like an early assignment, wake up in the morning and find out your short position was covered by the broker in order to get back the stocks that you borrowed. So my question there is, why today would anybody short a stock when they could just buy a put?
That's an interesting question because, I don't know if I can answer that. I don't really know why you have large hedge funds and things that short a stock like this. I don't think I can answer that, but I think what they do is they have a balanced book. So they may decide that they want to buy, there's hundreds of them, different biotech, small cap, and they're going to, sell a certain amount, and then they get into these large short positions. And, I can't really answer that. I would never short any biotech stock, ever. Would never sell calls naked. But the fact of the matter is there's none to borrow. You cannot short this stock. And if you look at that synthetic relationship, it will determine that it's a hard to borrow. And if you pull up Thinkorswim right now, that's on my Windows side, it'll say NTB, none to borrow. And I believe Stephen asked a question about the expiration, and this has been underwater for weeks. If you look at the earlier expirations, it's not quite as bad now. It's only 10, 15, 20 cents underwater. But, I've been following this every day just to get an idea when the squeeze is done. But I picked September because it was pretty, Stephen just said, okay. I picked September as a pretty blatant example, but if you pull up like the June, it's not going to be as blatant. So we sell for 60. Again, we use the market maker approach. You could use theoretical if you want, but we sell for 60, we buy for 60. So that's 30 cents, 31 cents underwater. Again, it shows that it's a hard to borrow and that there's a squeeze underway. But basically, I was just trying to show people to, always sort of check your synthetics just to get an idea. Because sometimes if you check, you might be able to determine that the option market is determined that for instance, a dividend is in jeopardy. So you could use it that way also. So it's just a good idea if you're involved in this, a few hundred shares, you may be involved with maybe a bull call vertical, whatever the case may be. Take a look at your synthetics, and it just gives you some more information in effect. And, where this stock will go, I certainly don't know. I owned the stock. I don't know if you can see my arrow, but, back around $10. And I had 10,000 shares. I eventually got rid of all the shares and went into calls. And so I'm strictly in calls now to, take some risk off the table. In fact, I rolled out some calls today also. But, so I take a look at this every day and just, take a look. When will this squeeze end? Because I can't really explain the reason for the squeeze because I don't really understand a big player shorting stocks like this. But the fact of the matter is just take a look at the NASDAQ.com and look at your short interest. And, there's huge amounts of shares of biotech stocks that are short. That's probably not for you or me or Jerry or Tom, or most of us probably wouldn't do that. But the fact of the matter is these big players, they short thousands and thousands of shares and they buy thousands and thousands of another company. This guy who runs this company, Frost, he sold a company to Teva. He's a multi-billionaire, lives in Florida. He buys this stock every day in the market. I can't tell you why anyone would short this stock. That I don't understand. But the synthetic shows me there's no stock available. And
Interesting.
They're calling in that stock little by little.
Yeah, one of my last corporate gigs when I was in IT was with Andrix Pharmaceuticals, Dr. Frost.
That's him.
Yeah,
he sold
yeah.
Andrex to Teva.
And that was also,
That's
I
right.
think, not only Teva, but it was Welcome Burroughs, or it was another company as well. And it was funny, when I was working there, Andrix had the first in line to sell Prilosec as a generic. And I had corporate stock options. And it took them, they dragged that out for about 2-3 years through the courts. I knew the judge's name. I knew when she took vacation. I knew when she broke a leg. And by the time that they finally came to a resolution as to whether or not Andrix would be able to sell the Prilosec version, AstraZeneca had already gotten Nexium pumped through the pipeline. So it didn't matter.
They right off the shelf. Remember that? It was about 10 years ago. I was a pharmacist then. We had generic Prilosec, and we were selling it like through the roof, and then all of a sudden it stopped. That's funny that you were involved with that. I remember that like it was yesterday. And the other company that was Ivax Pharmaceuticals to Teva.
That's right.
And the guy's really into doing good things for the world. I don't know why you would short sell his stock. I mean, to me, my opinion would be freaking nuts. But, the guy is worth, he's probably like number 30 in the world for richest guys. You're going to bet against him? I can't explain that.
Yeah,
he is. That's funny you bring up that Andrix because I remember that the generic Prilosec came out and we were selling it like hotcakes, and then all of a sudden for a few months. Actually, for probably like a year, they might have stopped it, right?
Yeah, they were tying it up for about a year and a half on little technicalities.
That's right.
Really an eye-opener as to how the pharmaceutical companies just, you can't fight the Fed or the pharmaceuticals.
That's funny, yeah.
And and as far as Dr. Frost goes, I noticed with OPCO about 6-8 months ago that he is a huge inside buyer of his own company
every single day.
Mm-hmm.
Every single day buys the stock. Well, just for the heck of it, why don't you take over and look at the chart? I don't generally buy into technical stuff just because it's kind of all fundamental, but I don't know. Do you see a stopping point in this stock technically? I don't know whether you
Oh,
can do that or not.
Let's take a look.
Because I rolled up to 20 calls today because I made so much money on this. I've made over $50,000 that I said, you know what? I'm just taking my money off the table. I'm buying 20 strike calls in January 16 and January 17.
Interesting looking chart. Did I get the
Wait,
screen?
I don't see you. No, I don't see you yet.
Hold on a second.
You just need to share.
There we go. That's what I learned today. For those of you who remember. All right. Very few people probably get that. All right. I won't go there too deep. Take a look at OPCO. Interesting how I had done some analysis on the stock a while back. I kind of, haven't looked at it in quite a while. You can see where I drew my lines. We had a downward trend channel at the time, and for whatever reason, I never did take a position in it. Notice how it went sideways for the longest time, then it broke up, and look at these fibs. Look at how once it did break, and so if you don't believe in the technicals, David, here's an example for you because
Okay.
Once price did finally start to move up, it came and it hit its head right on this resistance of this. There's two Fibonacci lines right here. It's hard to, I've got to zoom in order for you to see that that's not just one line right there, that's two. And so that's a Fibonacci cluster that also was coinciding with, the moving average is caught up with it over here. So this now becomes prior resistance, becomes support. And so this area down here at 15 is extremely, that's obviously going to be your support level. So the analysis I must have done way back when I told you I was looking at it, when was that, back in December of 2013, or even further out, probably about a year ago. These Fibonacci extensions called this level, and then the other extension here, the 123.6, notice that price went right to it, and that's where it stopped. Now it's on its way up to the next one up at 1881. Now, what's interesting about 1881, one of the things that I teach is, for people who are new at stocks, they say, well, if I buy a stock at $10 and it goes to 20, I made a double. The problem is, what if it only goes to 1880? Or what if it only goes to 1930 and then comes back? So I don't place, a lot of new people to the market or people who just believe in round numbers can get shortchanged, or they can get frustrated because they're saying, man, if I only would have, why didn't it go up to 20? Why didn't it go up to 19?
So that 138 fib maybe looks promising.
Correct. The 138's at 1933. And there's another thing, there's another factor here as well, that a lot of hedge funds have their charters that say that they cannot hold stocks if they're below a certain level. A lot of companies, a lot of funds cannot own a stock if it's below 20. And that's why sometimes you'll have these huge gaps. Notice how price 15 is also a threshold like that. So notice how price hit 15. And this is where a small cap growth stock turns into a mid cap, because it goes ahead and it hits the 15 level, and the fund managers are just saying, please, can you please go ahead and get over the 15 mark? And then once it does, boom, it'll start snapping up and gravitating towards the next number. So it looks to me, as long as everything fundamentally is good, it's gravitating towards 20. What I do as far as doing analysis fundamentally, one of my favorite websites is FinViz.
Yeah, it's a great site.
Especially for the price. And so you take a look, you've got all of your, insider owned 7%. you can see down here, you're going to see, look at this. Here's your Philip Frost right here. Look at him. He says, buy, 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 but he makes Kramer blush. Look at all the buys. And look at how much he's buying, 6,000 shares. Yeah, he's just buying the hell out of this thing all the way up. That is real inside buys. Whenever you see somebody buy 10,000 or sell 10,000 shares around the holiday time, it doesn't mean a thing. But this is, this is obviously a guy that believes in whatever they're doing. And what are they doing? Pediatric, they're doing some kind of growth hormone deficient pediatrics?
They've got a great test on prostate cancer.
Okay.
It's a test that's very non-invasive. It's better than what we use, nowadays, where we just look at the levels of blood levels, and then the doctor sticks his finger up your butt, and so.
Yeah. It's interesting.
There it is there under that May 17th.
Yeah. Yeah, there it is, the annual meeting. So you've got, I don't know if you've, a long time ago, back when I was working at Andrix, I wanted to go ahead and talk to more people inside and out of the industry as far as pharmaceutical. Obviously, pharmaceutical stocks, it's like you can see these companies skyrocket and turn you into a multimillionaire almost overnight if you're close to the ground. And
right.
So I don't know if you as a pharmacist have taken that type of inside familiarity. It's not inside knowledge.
Pretty well. I was lucky enough to get involved with Pharmaset that Gilead bought out. It was just about the largest buyout at the time. So I have to ascribe it at least 80% to luck, but I've done pretty well over the years because of my knowledge of biochemistry. But again, I really want to say it's probably 80% luck.
Okay, well, hey, listen, luck has a lot to do with it too. You got to be, and what do they say? What's the saying about luck being in the right place at the right time with the right?
And you got to put your money on, put some money down on the table.
That's it. That's right. Well, we're coming up. We only got a few more minutes left. There was a question there. I don't know if you saw. Is that somebody was asking if was that the only expiration that's underwater?
I think I answered Stephen on that.
Okay.
I showed earlier. I showed June or July expiration, and it was less underwater. It was like 35% underwater. I mean, 35 cents. But I think I answered him satisfactorily, I believe.
Interesting. I mean, if you could go ahead and come up with, some solid examples, and, I'd love to be able to see if you've got your telltale signs. I just always figured that any anomalies in the option market are quickly obliterated due to
if you have that situation, it basically has to play out. So, what I showed on OPCO is, I don't want to say it's common, but I mean, you will see that, fairly, if not often, but fairly often you will see that. It's just, there's no stock to borrow, and the options will take on that dynamic. And I've been involved in the stock for quite a while, so I don't know what the best strategy would be, say, today. But one example is, you could buy a strangle in this stock for very cheap. I'm more of the opinion of being long this stock straight. But my point really was just to kind of show people, look, you can take a look at that synthetic, and you can see if it's a hard to borrow or a none to borrow. That was about the extent of my point. I don't know exactly what you would do with that if you were brand new to the stock today, for instance.
Well, I mean, it's the first time in a while that I've looked at the option chains through OptionView, and right off, I mean, the spreads are tight. Open interest looks good. It looks like the implied volatility is static. I don't see anything.
Yeah, it's funny. It's just started to go up a little bit.
Yeah, it's a
It's
14
just,
percentile.
it's a little bit of a strange situation.
We got a huge amount of calls at 17. And then look at this. Maybe somebody did a calendar here. They may have done a June, January calendar.
Yeah, see
11.
that 20 strike above? I rolled into those 20 strikes. So when you see that $1.95 price, that's my price. But I sold shorter dated deep in the money calls, and I rolled out to that 20 strike in Jan 16, and I also rolled into the Jan 17 20 strikes.
Interesting. Yeah, look at the leaps. How's we doing on time premium? Hey, look at the premium. That's not bad on
No,
the
it's not.
17s. Yeah,
It's not.
very good. I might dig into this some more. We're coming up on the 1 hour mark. Does anybody have any other questions? Or Tom?
I just had one quick question, Jerry. The Andrex guy, wasn't he a guy in Canada? That wasn't Frost, though, was it? Wasn't that a different guy that was running that company at the time? That was like 12 years ago.
Exactly. I came in just as Dr. Frost was he was on the outside. Andrix had a couple of divisions. They had their pharmaceutical and generic and then distribution division. And their distribution division was huge. And their own private label, they had their own brand drugs for Andrix, then they had ANDA as a distributor.
Right.
Dr. Frost was more involved with the
maybe
brand
on the
name.
board or something. I just don't remember that he was the head honcho. I think it was somebody else, wasn't it?
Exactly.
Canadian
He was on the board. Alan Cohen was like the CEO, and a colorful cast of characters. You had Dan
Yes.
Marino walking through the place every now and then, and Don Shula was even involved on the outer edges.
Wow.
And every once in a while, because I was over in the IT area, I would see groups of potential investors being shown the new computer rooms and stuff like that.
That's
So,
interesting.
extremely well done outfit. But I don't remember a Canadian as much as.
I thought it was a Canadian guy that owned Andrex, or was the. Anyway, I can look into it, but yeah, that was a long time ago. But I remember it very well, that generic Prilosec that they got out onto the market, and they released hundreds of thousands of units. You know, they just boom.
Yeah. All right. Well, I'd love to talk to you more, even whether it's on or offline, about the pharmaceutical industry, because I really believe that when we're option traders, we're looking for volatility, or traders in general, and I don't think that there's a better industry than pharmaceuticals for volatility.
Yes, a lot of opportunities.
Oops, yeah, I've just got some volatility on the floor here. Okay.
Thanks for the great discussion, guys.
All right, guys. Thanks, and good night to everybody.
All right,
good night,
Tom.
All right, bye-bye.
All right, take care. Good trading, everybody. Be well.
Thanks.